Hi, good afternoon, everybody. Okay, sorry for the 10-minute delay. We're going to do a number of things today. Okay, so why are you not all here? Not many are here. Okay, they're afraid of the rain, huh? Yeah, me too, huh? Okay, I hope they come soon. Anyway, our plan today is our plans today are, not this many. All right, so number one, I'm going to do a mind map and review some of the main aspects about, you remember we talked about statutory audits? Yeah, audit. It talked about regulation, correct? What should be done, who should do, things like that, correct? So we'll summarize some of the important parts today, and I'm going to do a mind map for you. So you kind of like summarize it in your mind, the topics around that particular area. Okay? Now, the next thing we're going to do today, and it's very important, will be chapter 4. And this one is about professional ethics. Okay? There are a number of things we need to talk about in professional ethics. That is why we're going to talk about it today and as well as tomorrow. Okay? 2 days of just professional ethics. Okay? In addition to discussing the topic, I will give you some class activity to do. So you will need your computer. If you brought it today, we'll do some short activity today. But tomorrow, I'll give an exam type question. So I really need you to bring your computers tomorrow. Okay? So just in case today you forgot it. All right. As well, I'll give you something to work, okay, at home. And remember, you can work this out with your, yeah? So you can work together. All right? Now, another thing I want to tell you today is our next class is a little bit change in the schedule. I will meet you again, supposedly after this weekend, I'm supposed to meet you on 23rd, correct? Okay. So I'll move it to next week because the week after I have to go for training. So I need to make sure that I cover a lot of things before, as much as I can. So you can have the time to study more on your own when I'm not around, okay? So, when do we meet again? No, I changed that. Not on the 20th. That will be next week. What is next week? Next week is, yes, 10 and 11 August. Okay? That is our next class. No class on 23rd and 24 August. 24 and 25, is that correct? No, wrong. Yes, 24 and, is that Saturday, Sunday? Yes. Okay? So this one is a happy face, correct? Because there's no class. Alright, so that will be, remember, no class on that day. Alright, clear? Okay. So we're going to, that is our program for today and of course, your next week's class. Please take note. Okay? Please take note. Alright, so let's start with our mind map. And remember, in our mind map, I need your help. Okay? Because this is your review as much as I am reviewing the details. So remember, we're looking at regulations. Okay? Or regulatory. What are the things that are covered? The first thing we talked about is who needs statutory audits? Okay, when you say statutory, it means what again? When you say statutory, it means it's required by law, correct? Okay? So, who is required to actually, as per the UK standards, who is required by law to have audit? Small or large companies? large. Especially when we say large companies, these are also the ones that are what? Okay, listed in the stock exchange, correct? Okay, good. Let's make it bigger so you can see. Alright, so what are we doing here? We are doing a review. Alright, so when we say large companies, okay, we said they must be audited. Now, this is something that we didn't talk about. In the UK, they considered large companies where the turnover, what is turnover? The sales, yeah, is greater than 5.6 million pounds. Okay? Any company bigger than, okay, that has sales higher than, okay, 5.6, or sorry, not 5.6, I got it wrong. 6.5, reverse. 6.5 million pounds are considered, okay, large, and therefore they are required by law, okay, must be audited. All right. Now, how about small companies? What do we say about small companies? So, which means small companies, anything below that 6.5, okay? So, small companies are what? They must be audited or they may be audited? May. So, it's their choice, isn't it? Okay? So, they may be audited depending on their need, correct? Alright, so do you remember what are the needs? Why do you think they should be audited? They want to be audited? Do you remember that? Why do you think companies want to be audited? Small companies. It's not required by law, but give me some example. Okay, maybe the shareholder wants it, correct? Okay. Settle accounts with shareholders, settle accounts with partners, correct? Okay. So, wanted by shareholders. What else do you think? Okay, so if they want to review financial statements, to settle, for example, settle accounts with each other. If it's a partnership, you remember? Sorry, maybe you'll not understand that when you review accounts. Okay. Another thing, just one more. Give me one more reason why some companies, even their small groups, anybody? Okay, so if they want to, you buy somebody out, yeah, you do due diligence, and some of them they want audit, yeah. All right, so mergers or acquisitions. All right. There are more in this list. One of the things is, you remember, they want to check their internal controls, correct? Okay. Review their internal controls so they get their documents audited. Do you remember the story about the sleeping partner? Yeah, what about that? Why does a sleeping partner want to have something audited, their financial statements audited? Okay, to be able to know what's happening, correct? Because the sleeping partner, what does the sleeping partner do? Sleeps. He's not involved in what? In the operation, but he wants to know the details. All right. So these are some reasons why you have audit of these financial statements. Okay. So, of course, part of the discussion about regulations is that there are standards to follow. Correct. Okay. Now, in the process of auditing, there are standards to follow. And who sets the standard again? Okay, so there is the standards that we need to look at. So, who is the body who actually has that IAASB, whatever? Who is that? Remember that who looks after our profession in general? Who is that? The IAASB is the one who did the standards, correct? But the one who heads, what's it called? Okay, and that actually means what exactly? What does that stand for? International what? International Food Corporation? International? Yeah, sometimes you make things up, isn't it? International Federation of... Okay, very important that we know it, right? So the IFAC, which is the International Federation of Accountants, look after all, okay, all of the accounting bodies around the world. Okay, what are these accounting bodies? It can be ACCA, correct? Okay, any other accounting bodies around the world. Okay, not only ACCA. ACCA is just one for it. Okay, now, so under IFAC, the one who sets the standard is called, who sets the standard? IAASB. So this is the one who sets the standards. Any kind of standards, not just the auditing standards, okay? They're the same one who sets the IFRS, by the way. Okay? So any standards. Now what does that mean? What does IAASB stand for? Without looking into your notes, I can hear the pages of the book moving. Okay. International what? It's okay, you can move the books, huh? No, I'm just joking. Okay, you can look into your notes, of course. International what? Auditing. And what? And assurance. Okay. Assurance standards board. Okay? So they look after setting up the standards. Alright? So, okay? So let's see. One of the important things that we looked at this board is how do they process. Because remember, the standards are not like set in 1970 or 1966 and thereafter is not anymore changed, correct? It's regularly updated to meet current economic and financial situations around the world. So, do you remember the process? Can you tell me the process? Let's look at the process on how they actually set up the standards. What was the first step? Anybody? What did they say? Okay. What was the first step we said they would do? Give me the first one. Okay. So that they identify the standard or identify the change, correct? After that, what do they do? What does it say? What do? They identify the standards and then they debate immediately? What does it say in our notes? You remember where it is? Can you find it? Where is it? So you don't even know where it is. Can you find out what do they do? Yes? You remember it was like boxes? Yes, and you had to write it? Ah, okay. There you are. Okay, so what does it say in the first box? Okay, research or identify or research the details. Okay, so let's put that. Then after that, they what? After they research. What did they do after? What does it say? You cannot read your own handwriting? Do they debate?
Transparency debate.
So they debate, correct? Transparency debate means that you have to do consultation, right? Okay, is it consultation? Yeah. So they would debate. After the debate, what do they do? What does it say? After they debate, means they discuss between the members, correct? What do they do after that? Okay, so, alright, so we have, alright, so they do a debate, or why do they debate? They would actually, they consult each other. In other words, they discuss it, yes? Okay. Once they discuss it, they need an exposure draft. Why exposure? Means they will need to give it and show it to the public. Okay. Who is the public? All of the accountants around the world registered under the IFAC. Okay. So who's registered under the IFAC? If I am an accountant, I register with KICPA, I automatically become a member of the IFAC. You understand? Because KICPA is a member of the NAC, NAC is a member of the IFAC. The same thing in different countries. Okay? So it happens like that. So public exposure, which means everybody is supposed to come back and give their opinion. After they give their opinion, what happens? What does it say? Sorry? Side of the room? After they do the exposure, everybody comes with their comments, what do they do next? Okay, so you need to consider the comments to make any final changes, correct? Okay, so you consider the comments to actually make any amendments or changes. Amendments, because you have some comments that you have received, correct? Okay, after that, what happens next? What is the last step? The last step. What's the last step? Okay, put together. Approval. Yes, approval, and of course, it becomes part of the standard. Okay. Now, if you were here last time, why am I talking about this? Because one question in the exam may require you to remember the question in our activity. Yeah. State what is the process, correct? And they give you some options, alright? So, alright, so that will be good to remember. Now, okay, so now let's come to the rules on or regulations when it comes to our job as an auditor. Okay, let's see. So, who can become an auditor? Let's talk about auditor. Who can become an auditor? Do you know? Okay, first, it should be what? Not all accountants are auditors, correct? Yes, you agree with me with that statement? Okay. You only become an auditor if you become a member of a recognized supervisory body. Okay. Recognized by whom? Recognized by IFAC. You understand? Okay. So in Cambodia, example, if you are not a member, an active member of the KICPA, you cannot audit. Okay. You would say, but there are students who are auditing, they're not even ACCA yet. No, they are the ones who are doing the junior work. If you're going to be an auditor who can sign auditor's report, you have to be a member of the KICPA. You understand? Okay, now you have the junior auditors who are doing the dirty job. You understand? You know the dirty job? I'll tell you the dirty job when we look at procedures. They are the ones who look for invoice by invoice, and they have to look at the totals. They're the ones who have to sleep overnight in the company office to finish the job, while the partner goes home and sleeps, right? So but the partner is the one who can sign the auditor's report because he's the member of the recognized supervisory body. Okay? So, you would say, it's unfair. Well, that's it. Take it or leave it. Anyway, alright, now, So, what are these? If you're this member, you can do what? Okay? You can audit. Okay? You can, okay? You're authorized to sign financial statements. Okay? Or auditor's report, sorry. Now, who cannot? Except who cannot become an auditor. Okay? Even if you are registered with KIPA, but you are the officer of the company, I cannot audit my own company. Do you understand? Even if, because as an accountant, as an auditor, can I have my own company? Yes, I can. But I cannot audit my own company. Do you understand that? Yes? Okay. What else? I cannot audit a company I am an employee of. Okay? I am an employee of. Or I am a business partner. Can I be a member of the KIPA at the same time a business partner? Yeah, I set up a business Starbucks shop near Independence Monument. Now, I'm also an ICON member, but I cannot audit that particular company. Do you understand? Because I'm a business partner of somebody who owns that. You got that? So you cannot do that audit. Alright? Now, alright. Therefore, next question is, how about appointment of auditors? Do you remember this? The first question is, who? Who can appoint the auditor? You remember this? So, the first one, the board of directors. There are only three, correct? The shareholders, and the last one is the who? The government. Okay, I'll just put government. Okay, you know what I mean, right? So the government. Okay. So, do you remember the order? The board of directors can appoint the who? Only the first auditor. What does it mean, first auditor? If the company just set up, right? Okay, so the first auditor can be appointed by the board. Now, the shareholders can appoint if it's the what? I'll just put the word subsequent auditor. Okay, this will be here. Oh my God. Oh my God. It's a little bit delayed. Sorry, guys. Subsequent auditor. Yes? Or, when else can a shareholder? Subsequent means what? If the first auditor of the first year, correct? Resigns or retires. So the second one, the shareholders, correct? When else that's a shareholder? If they're removed or resigned, correct? Yes. So the shareholders, okay? Shareholders can, sorry, wrong spelling. Removed or resign. Okay? They can actually. All right. When does the government come in? When the BOD and shareholder fails. Alright, I'll just put fails. You know what I mean? Fail to appoint. You got that? Okay. Alright, so. Good. Now tell me, how long does the auditor, how long do they stay in office or are valid, their appointment is valid? How long? I'm talking about publicly listed company, right? They have to hire an auditor not only for a part-time. It will be from what to what? From, remember AGM? What does it AGM mean? Annual General Meeting until the next. You understand? Because normally, they should be they should be appointed during the AGM by the shareholders, correct? Generally, it's the shareholders. Now, their term of office, the auditor, can be our auditors until the next AGM, until the end of the next AGM. Because remember, he has to be able to tell and give explanation on the auditor's report. Okay. Now, there's one more very important aspect, two basically, that I need to talk about with you. And there are two things about the auditors. Number one. So slow. Okay. The first one I need to talk to you about as an auditor are the duties. And the second one, okay, the second thing I want to talk to you about is the auditor's what? What do you think? Yes, the auditor's rights. Okay, let's talk about the duties first. Okay? Alright, let's talk about duties. What is his duty? The auditor has the duty to alright. First duty, main duty, to do what? What is the duty of the auditor? What is it that he has to do? Yes, I heard the word. Form an opinion, correct? On the what again? Opinion on? On which opinion? On the financial, okay. If the financial statements are what? True and fair, and what else? If the financial statements are prepared in accordance to what? To, financial reporting, reporting standards. Okay. Example is IFRS, correct? That is his main goal. Okay. His main duty. So, in the process of doing that, what will he do? Okay? What are the things that he do as part of this duty? He has to do the following. He has to check. What does he need to check? Give me one. One of the things that the auditor should check is that, remember, they give you a financial statement, correct? And a financial statement is in a piece of paper. Now, that financial statement, you agree, is a summary of what happens on all the transactions recorded in the accounting system, correct? So what is the thing that you need to do to be able to form that opinion? You have to what? Okay? You have to agree the what? This is the action. Agree the FS with the what? With the accounting records. Remember, I told you, financial statement is a piece of paper, right? He gave you a piece of paper, so you have to actually agree with their accounting records. So you need to look at their accounting records, the trial balance from the accounting records, that it matches that, correct? Basic comparison, okay? And of course, alright, if the company has many branches, now you know you have to consolidate, right? Okay? So you need to make sure that the proper returns or the proper documents are made. Do they have financial statement of financial position? Because when we say financial statements, when we refer to financial statements, by the way, in auditing, what do we refer to? Do you know what we refer to when I say financial statements? The balance sheet or statement of financial position. What else? Okay, statement of profit and loss. Okay, statement of changes in equity. Third. Yes, statement of cash flow. And there's one more. notes to the financial statement. That's what we mean when we say financial statements. You understand? Okay, please take note. So which means when I check that all the financial statements are made, means that I have all of them. You agree? Okay, I have all of them. So let's write that down. Okay, now I don't know how to write it and make sure that we have it. Okay, so, all right, so what are these again? You have the statement of financial position. Agree? Again, statement of comprehensive income. Correct? What else? Statement of changes in equity. What else? Statement of cash flow. Yes? Agree? And notes to? Yes. Alright, clear? Okay. Now, what else do we need to check as part of our duty? Okay? Not only do we check the FS against the accounting records, we must also need to check if the company has proper accounting records. Because pieces of invoices do not make accounting records, correct? Okay? Accounting records is that they have a proper journal entries made, summarizing to a general ledger, correct? Now, remember, accounting records should it only be computerized? Will I consider accounting records to be proper if it's computerized? Answer, yes or no? No, because accounting records can be manual. You understand? Okay? So some companies, because of the size of their company, can be manually done. Alright, now, I'm not talking about Excel spreadsheet. That is still manual for me. When I talk about computerized, I'm talking about QuickBooks and all that. You understand? So, it can be any. Alright? It can be any of these. So, they have to have the proper accounting records. Now, okay? What else? What else should they be able to check? Okay? So they need to check any other information, okay, required to understand the financial statement. Alright? So these are the duties and these are the things that they need to check. Now, if auditors have duties, they also have rights. Now, I told you to remember those rights, didn't I? I asked you to remember the rights? Yes or no? Yes or no? Okay, now, without looking into your notes, give me the rights. Yeah, you answered me yes. Okay? So what are the rights? Alright, so let me put it two ways for you. Okay? So the auditors have, okay, just kidding you, but I'm sure you will remember this. During the audit, when the auditor, they do the audit, they have certain rights. Give me one of them. Very easy. During the audit, I cannot form an opinion unless I do what? What do you think? What is the first one? Yes. I cannot check anything unless I can access their books, we call it, or their records, isn't it? Okay? Alright. What else during the audit? Yes, I can look at the books. But some of them, I may not understand by reading the paper. Right? So, I have the right to what? Okay? I have the right to be given information or, what's the word? Another word. Explanation. From whom? Who should give me this explanation? The management or the person that is in charge, correct? If the question is about the accounts payable, the payable manager, accounts manager should actually answer me, correct? If I want to ask question about the general financial statement, I should be able to ask the accountant or the controller, correct? So those relevant officers must be able to give me another, okay, enough information. Okay, what else? What else should I be having during the audit? Should I be informed that there is an AGM? Okay, so notice of AGM. Notice means information or a news. Okay, so in other words, an invitation to come to an AGM. All right, now I am in the AGM. Right? Now, this is still during the audit. Why during the audit? Remember, I am hired from which point to which point? From AGM to AGM. So all that period is called audit. Because I can audit any time during that period, by the way. Yes? So, during the period, I should be notified that there is an AGM. Okay, so I have given an invitation to come to the AGM. Now I am in the meeting. I have the right to what? Okay, I have the right to speak, or another term we said, I have the right to be heard. Okay? Now, two things, Why speak and then to be heard? Because you can always speak but nobody listens. Right? They have to be able to, okay, speak and to be listened to because they have some authority on what they're doing. And what else do they have to do? They have to have a copy of the what? Copy of? Yes, copy of written, not minutes. Minutes and resolutions are different. You know the difference between a minute and a resolution? Yeah, what's the difference? A minute is all the points that have been discussed during the meeting, correct? A resolution is something that is more official, that is a legal document signed by all the members of the board. Okay, all the members of the board. It is something that is, there are things that, as per rules of the board, they have to put it in writing. Examples I'll give you. To open a bank account. Can anybody in the company open a bank account? No, even the CEO cannot just open a bank account. It's the board who has to give an authority in writing that a bank account is to be opened with this particular bank. And it has to be signed. You understand? Okay. The board has to appoint the shareholders, correct? The auditor. It is in writing in a resolution. Do you understand? Okay. Now, things like mergers and acquisitions. No, it's in the minutes, but there must be a board resolution. You understand? It has to be signed. So you have to have a copy of that resolution. One other resolution that happens in the AGM is the payment of dividends. Yes? That has to be approved by the shareholders, right? That has to have a resolution. During the AGM, a resolution has to also be agreed, okay, and to be signed. So the auditor has to have a copy because these resolutions actually may affect the financial statements. You got that? May affect the financial statements. Okay? Good. Anything else that we forgot? Anything else? So they can be heard. They should have a copy. Okay? But there's something I want to add, which we talked about the last time as part of the rights. Now, if the auditor resigns, does he still have rights? What are his rights? He has to what? He resigns, not remove, resign, which means he has a very good reason why he's going to get out of this company. Okay? So he can call a what? He can call an EGM. What is that? What is an EGM? So what? Extraordinary.
Now, the AGM is an ordinary because it's happened every year, correct? It's an annual general meeting. An AGM is an extraordinary, which means it happens not at the regular time. Okay? I'll just say AGM. And of course, he has the right to be heard again. He has the right to speak and be heard. Okay? And one last thing, he has the right to issue a statement of, what do you call that? Circumstances. Do you remember? What is in here? He has to write in there what? Reasons why he is resigning. Very important. Okay? Because the reasons that he resigns, okay, can be has something to do. It can be that it has something to do with his work in auditing the financial statement. And everybody needs to know. Who is everybody? All the shareholders. Who else? The government. Do you remember? A copy goes to the regulatory body. Remember? Yes? So, this statement is very important. That he has the right to actually issue that. Yes? Okay? So I think if this mind map summarizes, okay, some of major important parts of our discussion. Yes? Any questions? Sorry. I'm sure you can see. Okay, anybody do you want me to make it big? Are you okay now? Okay. Yes. Okay. Are you want it bigger? A bit? Okay. So that's the last part. Alright? Now, of course, if you miss out anything, when I post this in your Google Classroom, you can actually expand it. Yeah? So you can see the details because it's very small otherwise if I make it all together in one screen. Question? Oh, no. The management letter is something else. The management letter is a summary of what they find in the internal control. Okay. Do what? Which one? The statement or the... Oh, no. The management letter is our deliverable. It's one of the things that needs to be given to us at the end of our audit. It's like at the end of the audit. At the end of the audit, we need to give our auditor's report, correct? Okay. Another thing that we need to give after our auditor's, aside from auditor's report, is called a management letter. Okay, that's why I said it's deliverable, which means they have to see it by the end. Okay, now, there's a distinction between a management letter and a statement. A management letter, you can see that later, is a summary of the internal controls that are weak in the company and that has our suggestions on what they need to do. Okay. Alright? Yes? Oh. Okay, and this is an example. An AGM, extraordinary means a general meeting is, okay, let me come here so everybody can see me. Okay. A GM, a general meeting, is a gathering of all the shareholders. Okay? A general meeting. The general meeting normally happens once a year. So that is the AGM. But if you call another meeting aside from the annual meeting, it's called an extraordinary general meeting. Now, one of the reasons could be, it can be something that the company needs to get the shareholders to decide on something. Okay? For example, the board can call an AGM if they want to sell, merge,
Okay, acquire another company. Do you understand? A major decision that cannot be addressed only by the board. It has to be all the shareholders. Okay. Another one is if the auditor will resign. Okay. Now, why is it a big issue? Because the general meeting means all of the shareholders of the company. Now, imagine Microsoft. Microsoft shares is traded in the New York Stock Exchange. Means that their shareholders can be anybody and many. Do you understand? Somebody can have 5 shares, 10 shares, you understand? Are you still a shareholder? Yeah. Because there are major shareholders, there are minor shareholders. Who's supposed to go to the general meeting? All of the shareholders. You understand? So it's not just a meeting of you can just call any time. And you have to call everybody. So it's called extraordinary. Okay? Because it's a big activity to gather all of the shareholders together. You understand? Yeah. So there's an AGM, which every shareholders actually expect to do, to come together. But there's the extraordinary one, which can be called on depending on what the board needs to do. Yeah. That's what it is. Any more questions? Yeah, no more question? Okay, alright, so that summarizes our previous lesson. Now, I would like you to open your notes to chapter 4. Very nice chapter. Anybody read the chapter before you came to class today? No? Oh my gosh. Well, at least you're honest. Okay. It's an interesting, it's a very interesting chapter, but it's a very important chapter at the same time. Okay? Very important. Okay? I already told you many times, this particular chapter is asked in the exam in many sections, not only in one section. Okay? So we will do some multiple choice exercises. At the same time, long explanation exercises. Okay? So what is this all about? What are we supposed to learn in this particular chapter? Now, number 1, our learning outcomes. Okay? So, look at the verb. Define and apply. Okay? What? The fundamental principles of our of auditing, okay, of audit. Now, define, okay, which means it's very knowledge-based questions, yes? Okay, so this is define, knowledge, question, which means they will ask you in the multiple choice. Okay, it's a knowledge. This one is more of critical thinking, which means it will tell you that the examiner will give you a situation and you are supposed to apply the principles on that particular situation. Okay? So they're going to be testing you on if you understand the principles as the definition, or they're going to ask you questions and give you circumstances and apply the principles on it. Okay? Right? Then, aside from the principles, they will also ask you, okay, say, alright, what are the threats? What are the things that will go against these principles? And you have to be able to identify them in a scenario. Okay? And we will practice on this in detail. Okay? In detail. Okay. So, the third point. You have the principle. You know what are the threats. The question is, do you know how to eliminate or reduce the threat? Okay?
Okay? Eliminate or reduce the threat. Remember, okay? It is very important that our principles are not, what is the term? Are not affected or are not sacrificed in the audit process. Okay? Because once our principles are not followed, then the report with your opinion at the end of the audit is useless, is valueless. Do you understand? Okay? Valueless. Because really, as an auditor, are we selling Starbucks coffee? Do we have something concrete to sell to a customer? No. What are we selling? We are selling our ability to do an opinion, correct? But that opinion is what people use, okay, to do, the shareholders use to make a decision on their business. Now that opinion is worth nothing if you are not following the ethical standards, because that opinion is they will believe your opinion because of your status, because you follow certain standards, you have certain ethical principles that you follow. Yes? That's the only thing that makes us, okay? That's the only thing that our profession is still alive today. Because if people say, I don't believe this this auditor's report, do you think we still have a job as an auditor? Yeah. Do you think all these Deloitte and PwC and everything is still standing up? You understand? It's all because people believe in what we do. That is why this topic in any accounting accreditation body is very important, because this gives value to what we're saying at the end. And without having to adhere to this, that paper you issue, that's called your auditor's report, is useless. It's worth nothing. Okay? So it is very important that to understand the principles, to see what are the threats, so you can actually eliminate or reduce, okay, the threat. Very important. Okay? So we need to look at our responsibility to actually, this is what I was telling you. It is our responsibility, okay, to uphold the principles, okay, in what we do. Now, right? So we're going to look at even before, okay, sorry, I will have to rephrase that. We review our ethical standards not only at the beginning of the audit, not only during, but even at the end of our audit, we still need to think, am I independent? Am I having a conflict of interest? You understand? All throughout the audit. Okay? Even at the point of accepting or continuing the engagement. Because in the middle of the audit, what happens if the partner suddenly had inherited some shares of stock of the company? So that makes him not independent. You understand? So it is actually evaluated every time. Okay? It is a precondition to an audit. Okay? You can say no to an audit engagement if there is a conflict of interest, or you have to apply safeguards. Okay? And then we're going to look at how the auditors actually go into an audit engagement. What does he do first? What does he do second? Before he accepts a client. Okay? And also, you would also hear the word quality control. Okay? Quality control. Now remember, again, we don't have a product that comes out in our process of making things, correct? It's not like
manufacturing company that have a product to actually do quality control, correct? How does quality control affect us? Where is it applied to? Okay. Okay. The question is, the auditors, they review the work of the company and its accountants, correct? Yes? You understand me? When we review the financial statements, we are reviewing the work of the accounting department as well as the owners or the board, correct? The question is, who reviews our? We review somebody else's company, but who reviews our work? You understand? So that's where quality control comes in. And how it's done, I'm going to explain that to you. Okay? Because there was a person who came to me the other day, or not the other day, the few terms ago, and says, if we do the audit of other companies, what about us? Who audits us? Okay? So, or there's a corporate governance for the company board and company executives, correct? So we have the standards that drives our work, but who actually audits us as auditors? Okay? Alright, so now you probably will think, why is she talking to me? Why is she always referring to us as auditors? Okay? I'm not an auditor. You say, I'm here, but I am working for a company, but I'm not an auditor. No. When you're in my room, in here, you are an auditor. Think you're an auditor. Because that's what we're going to learn how to understand auditing. Okay? So, whether if you're a company accountant, okay, when you come to this room and we're talking about AA, you are an external audit in my eyes. Okay? So that's the only way you would actually be able to understand more this topic and think that you are the auditor. You are the one doing the job. Okay? Then you will understand the principles more. Okay? Now, even if you're sitting here but you are the CEO of your company, no, in here you are an auditor. Okay? Alright? So you will be able to, you can choose. You can either be a junior auditor or a senior auditor. You can promote yourself anytime. Okay? Alright? So, and by the way, when you look at the exam question in the exam, sometimes it says, you are the audit manager. Wow. Next question, you are the audit senior. Wow. Okay, so you have different positions. So in here, we are all auditors, so we can understand. Okay? So here's what we're going to need to be able to understand. Okay? I need you, what did I tell you earlier? I need you to understand the principles. Understand what are the things that will be against those principles. And how do I reduce the threat or eliminate the threat? Okay? And then, of course, what are the processes that I should do before accepting an audit? And how do I finally agree the details of the agreement of the audit with the potential clients? Okay? So these are our major items we need to remember in this particular, okay, our learning outcomes in this particular chapter. Very easy, no? But there are many things in here. Okay? And the biggest thing is we need to be able to apply them in a scenario. Good? Okay, good. Now, so the first question would ask me, so what is ethics? Okay? Alright. It's something to do with being a good person. Okay? How you behave. Okay? Whether in a company or by yourself as a person. Okay? So you have to have some ethical standards. Alright? Now, professional ethics in this case has something to do with how we do things, whether you're an accountant or you're auditor. That's how you actually behave. Okay? So we're talking about professional ethics. Okay? Professional ethics. Now, for us, we have a set of code of ethics and conduct. And this is what we're actually going to be discussing here. Okay?
It gives us this code of ethics does not tell us a set of rules says, do not do this, do not do this. It's not like that. It's a conception. It's general. It doesn't tell you what you're going to do. It's like the IFRS. The IFRS doesn't tell you what to debit and what to credit, isn't it? Okay? So they give you principles, right? So exactly what we're doing here. They were to give us principles. Now apply it to your circumstances as and when you see it. Okay? So, what are the 5 fundamental principles? And if I were you, I put a star on this slide because I need to remember those words, exactly those words. Because if the examiner will ask you, list and explain the fundamental principles, you have to list the terminology. Not, because if you forgot, you sometimes explain it with 5 sentences, but the word actually only 1. Yeah? But when you say list, the examiner expects you to write the correct word. Okay? And this one, definitely you have to write. Okay? You remember these words. Okay? So the 5 fundamental principles: integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. Okay? Professional behavior. All right. 1, 2, 3, 4, 5. All right. But what does each one mean? Okay. Integrity. What are the 2 words that are associated with integrity? The word is straightforward and honest. What does it mean, straightforward? You are not hiding anything. Okay? Right? Straightforward means you're not hiding anything. Whatever you found, you say. Okay? There is nothing that you cover up. Okay? So straightforward and honest. Objectivity. First one. No bias. What is bias? You are not siding in one, correct? Yeah. You're not siding in one group of people, or you're not doing it for one particular purpose. You understand? Okay? So you're not auditing it to be able to get a loan from the bank. You understand? So it's not like that. It has to be, the work that you're doing is not biased. There is no conflict of interest, which means if I'm going to give my opinion on an audited financial statement, I'm not doing it because my shares are going to increase in value. You understand? Okay? There is no conflict of interest. And there is no undue influence. What is that? No undue influence, which means nobody can tell me what kind of opinion I should give. Okay? Or nobody will force me to say, you have to say that it is good, true and fair, and it is following the standards, when in fact it is not. Exactly? Because if you don't do that, I will not get you to be promoted. I know the owner of your audit firm. Okay? We are best buddies. So I will tell him not to promote you. So you better give me a good report. Okay? So you are not, okay? You are not actually, or you cannot be influenced, okay, by somebody else. Alright, here's another thing. Professional competence and due care. Let's look at the word competence. How can you become competent? What does it mean, competent? Yeah, competent means you can do. You are able to do what you're supposed to do, correct? Okay, so you can be a competent doctor, correct? You can be a competent accountant, competent teacher, for example, right? Right? So you have have to have, how do you become competent? I can do my job as a teacher, or I can do my job as a doctor if I have, what did you say? The proper skill, knowledge, and skills, correct? How do you get that? How do you get proper knowledge and skills? Yeah, that's why you're here, isn't it? Yes? Okay, so you have competence, which means you have proper knowledge and skills, the required knowledge and skill. Okay? That's why you have to go through and learn and study. You take exam by exam, yeah? It takes half a century to become an ACCA, right? It feels like that, isn't it? Half a century. But believe me, it has an end, isn't it? If you just work on it, one day, wow! Celebration. Okay? So, just get at it. So you get it. Now, it doesn't stop there. When you actually get and finish all your exams, you're supposed to work a bit, correct? To get to that ethics module, right? Okay. And you have to have a mentor to sign your documents before a paper would come from the UK that says ACCA member. Right? And oh, by the way, it doesn't stop there. Every year, you have to attend a seminar, a workshop that earns you what? CPD points. Correct? If you don't have the CPD points, you cannot have your membership, what do you call this? Approved. So why? Because of continuous building of knowledge and skills to be able to be competent, okay, to do your job. Okay, remember, that's why we have CPDs, because we have this current developments. Okay. Now what about due care? Due care means, okay, you might have had the knowledge and skill, but you're lazy. It is still against. You understand what I mean, lazy? You are not diligent. If you are asked to actually check 100 invoices, because that is your sample size, then you cannot say, it's okay, 50 is enough. I have to go home now. I have a birthday to go to. Yes, you understand? That is a very simple example, right? Okay, so if you're asked to, if you're supposed to do something, then you have to say, you have to do it. If you're asked to actually prepare a bank reconciliation for the first 6 months and one after the year ended, then you have to do 2 bank reconciliations. You redo 2 bank reconciliations. You cannot have shortcuts. Okay? So you must be diligent. You have to do your due care. Okay? Based on the work that you're supposed to do. How do we know what work we're supposed to do? That is why we're learning the standards. Okay? The ISA, what is that again? What does it mean? International Standards on Auditing tells us how do we audit an asset. Okay? How do we get evidence of a liability? You need to be able to diligently do it. So that is what you mean by due care. Okay? Now, this one, I'm sure you know what confidentiality means, right? Okay? So, we know we should not disclose whatever we find in the audit process to any third party. Okay? Any third party. Okay? Alright, so, especially if you're going to disclose it and you will have some personal advantage. Okay? For example, if I'm going to tell I'm auditing a company and then I know that my friend has some shares in the company and I saw the financial statement and it's bad. So I'll tell my friend, listen, you better sell now. Okay? Because if this financial statement is going to be published, your shares value will fall. Sell now. Okay? So, is that breaking my confidentiality rule? Yes, of course. Okay? Alright, of course. So, confidentiality. But we'll talk about that because there are instances where we can break the rule. Okay? Or we have to
break that standard. Okay, you understand? So, and this one, professional behavior. Okay, means that you actually follow laws and regulation. You don't do things that will discredit the profession. You're telling your clients, pay your taxes, but you don't pay your own taxes. Is that professional behavior? Of course not. Okay? So you follow relevant laws and regulations. Okay? So you're supposed to adhere to as a citizen to be able to follow that, correct? Okay? Now, you beat the red light. Is that professional behavior? You know the traffic light? Yeah? What do you do when tell me, what do you do when the traffic light is green? We can go, of course. How about yellow? Faster, right? And what about red? No, it's just a suggestion. Okay? If the traffic light is red, it's just a suggestion. So which means you can go or stop. No, just kidding. No, you have to stop, right? Now, these are very simple, but you know, then here it comes, you go fast, okay? And the police catch you and you have to go down your car and everything. And then here comes your client. Yeah? Imagine it, huh? Here comes your client and see you being stopped by the policeman because you just beat a red light. Now, do you think it will look good to your client that you understand what I'm saying? As a graphical thing, but your simple behavior affects your profession. Why? Can you say, oh, I'm only an accountant from 8 a.m. to 5 p.m.? Is that correct? Yeah? Then you have a card that says, Maria, MBA, ACCA. Yes? And you have a card, right? Oh, do you say there ACCA from 8 a.m.? No. Okay? You are your profession. So what is saying here that as a professional, you have to behave professionally. Office hours or non-office hours. Do you understand? Because you carry the profession with you. Okay? And people will believe on what you do, and the opinion you come out with because of who you are as a professional. You understand? So it's very important, this particular ethical principle. Got that? Clear? So, do you still want to become an auditor? Or an accountant? No more? You don't like? It's just that you need the ACCA because your boss needs to make sure that you're ACCA, otherwise you don't have a promotion, isn't it? Okay. But anyway, that is also, okay? It's still important, isn't it? Okay? It's still important. Okay. Alright. I think you need a break, isn't it? It's too much for some time. Alright. When we come back, I will talk about, okay, how many principles have we talked about? Okay, so professional behavior. How many were there? 5. So, from the beginning, integrity, objectivity. No, that's the no one you cannot memorize anymore. Professional, competence and due care. 3rd, 4th, and 5th. But when it comes to this, what did I tell you? There are instances when you can break confidentiality. And we'll take this up after your break. Okay? So, you can come back in 3:15. Okay, so it's 2:56 in my watch. So, alright, I'll start exactly at 3:15. Alright? So see you around after the break. Okay, guys, welcome back. Are you ready? Okay, ladies and gentlemen, welcome back. Right, so we said exceptions. Exceptions to the principle of confidentiality. When can we disclose? Okay. One, if is permitted by law, which means it's required, the law says you can't say, and you have to get the consent of the client or the employer. Okay, so the law says that you can divulge, but you need to get a consent. Or one is permitted, the other one is required. This one is voluntary, the other one is obligatory. Yes? When you say required, means you are obligated to do. Correct? Yes? Or it's part of your duty and right to disclose. I will give you these examples as well. Okay? Not necessarily something against the law, but you have to do it because it's part of your profession. Okay? So, voluntary disclosure, obligatory disclosure. You're obligated by law. And this one is because your profession requires you to do it. Okay? We'll need to look at it one by one. Now, when do you disclose? Because it's permitted by law, but you need to get your client's consent. Okay, number one. Okay. There is a law case in the court, justice court. Okay? And they sent your client a subpoena. You know what a subpoena is? Is a piece of paper that the law issues that's saying you have to provide the following information. You understand? So the law is asking you, or the court is asking you to provide information. Okay? Because it's maybe somebody stole money or something, and one of the documents is in your company, in your client's company. Okay? Now, if the law gives you a subpoena is a piece of paper where they instruct you, the court instructs you to do something. Okay? So, again, do you give? Yes, but you need to get the consent of your client. You understand? The client has to consent to giving the information. Okay? Alright? Or, nobody gave you a subpoena. But, you know that it is something that you need to let the authorities know because the company has failed to comply. Infringement means a failure. Okay? Failure to comply to laws and regulation. Okay? Right? Failure to comply. Okay? These are the two main ones. Okay. The other one is your duty to disclose being a professional. Although, okay, this disclosure is not prohibited by law. Generally, you have confidential, you need to follow confidential law, correct? But in this case, because of your profession, you can comply. For example, in a quality review by ACCA or by KICPA, what does it mean, quality review? It means that all, example here in Cambodia, KICPA is the one who has authority over all of the accounting firm and audit firms. Yes? What they do is that to be able to make sure that quality audit is done, they will actually review the work of the audit firms. What do? They go audit firm to audit firm, and they will select some of the audits that you've done for companies. Okay? Let's say we are part of PwC, which is a big audit, one of the big five. Okay? And then they will ask PwC, okay, you audited this client, and they give you a list. Now, then they will get the audit files. They will review the audit files. Now, some of this information in the audit files are confidential. Okay? And you're also supposed to actually, they will ask the auditors who audited that file. And they will ask you questions. Now, okay, now remember, these are third party, correct? They're not from the client nor your company, your audit firm. So it's a third party. So by law it says, do not divulge, correct? Except for, in this case, okay, it's not prohibited by law because a supervisory body, such as an ACCA or KICPA, is doing quality review. So you can state the whatever confidential item with regards to that audited financial statement. Do you understand? That is what we mean by quality review. Okay? Quality review. Now, sometimes some big companies also have their own quality review. Okay? So, they can do that. Now, another thing. ACCA or KICPA can investigate any issue with regards to an audit process. For example, some time ago, I'm not going to name the audit firm, but there was a complaint filed with KICPA about the work of one audit firm with regards to a client. So the client complained about the audit firm. Do you understand what I just said? Okay, so can a client complain on the work of the audit firm? Yes. Where do they go? They go to the regulatory body of that country. And in this case, it's KICPA. You understand? So they actually reported this audit firm to KICPA. Now, what does KICPA do? They have to do an investigation. So in the process of investigation, they will call the audit firm, they will call the auditors of that client, and they will ask questions. Now, it will include information that are confidential. Can the audit firm state that confidential issue in this investigation? The answer is yes. The answer is yes. Okay? Now, the third one. What is an example of the third one? It says, protect the interest of the professional who's doing it. Example, I have a client, I have an audit firm. My client has not paid the fee. Okay? So, I asked to pay, they didn't pay. They asked again, didn't pay. I took the case to the court. I asked the court to collect for me. But in the process of that, in other words, I filed a case against the client, correct? Now in the process here, the court will ask for information about the audit, how much was my fee, what are the details of it. Now, because of my interest in a legal proceeding, I have to state something confidential to the client. Do you understand? Okay? Because maybe one of the questions it will ask me, how did you calculate the fee? Right? Maybe sometimes you will have to say, these are the number of transactions they have, or my fee is based on the total income that they have, or something like that. So depending on, you might divulge something that is confidential to the client. Is that allowed based on this information? Yes. Alright? So, it is confidential, but it can be divulged in such because it is something that is my duty as a professional auditor. You understand? Now, what else? Comply with technical standards and ethics requirements. Okay? So, again, I can do that if there are investigations with regards to ethics and standards set up. Okay? Alright, so general, not in particular client, but in general information. Now, let's talk about this. This is a little bit longer. There's the voluntary, which we talked about, correct? When it's voluntary, remember, you have to get the consent of the client. How about obligatory? Do you think you should need to get the consent of the client? Probably not. Why? Obligatory means that it's by law, you are to state. Okay? You are required to state. Okay? As against permitted. Because if you're permitted, you can say no, right? You cannot say you're not obligated to divulge. Especially if you don't have the consent from the client. But when it comes to obligatory, it's important. Example, these are very big crimes, if you can say. Okay, let's explain one by one. Money laundering, treason, drug trafficking, terrorist offenses. Okay? If the ACCA suspects that the client have committed this, what is the word? Must disclose to the competent authority. Okay. What is money laundering? I'm not sure if I'm explaining that. Money laundering? Not watching the money. Alright. Money laundering is when you know that the client has activities that they actually make money through criminal means. Yes? What are criminal means? Such as corruption is criminal. Yes? Or you have found out that they do kidnapping to get money. Yes? Or okay, so these are ways that are, or selling weapons, for example. Okay? So these are money laundering activities. Okay? So that's one. What about treason? What is treason? Treason is actually doing things that is against a sitting, duly elected government. You understand what I just said? So if the company, you know the company is paying for buying weapons for rebel groups to actually go against the government. You understand? Or you know that the company is spending money or doing things that are getting people to rally against the government. You understand? Okay. Hurt the government and making sure that some people in the government are taken out of their seat, for example. Okay? So that would be considered as treason. Okay? So any activity in your audit process, you found out that your client is doing that, you have an obligation to let the relevant government or office or authority be advised. Okay? Now, number 3, I'm sure you know very well what that means, correct? And I'm talking about illegal drugs. Number 4, terrorist offenses. What would be considered as a terrorist act? A terrorist act is something that if it happens, will affect many people. Okay? Many people or a group of the public. So that would be terrorist offenses. Okay? That will have hurt the public. So these are some of the areas where we must disclose. Okay? As against, let's look at voluntary disclosure again. As against what? So you can see the difference. Example, remember what we said? Protect the member's interest. For example, we are suing somebody for
for our fee. Do you remember that? Okay. That is voluntary. Or is you need to disclose because the court statute, remember, is a law, right? Okay. The law, in this case, the law is through the court. Then you need to disclose. Or it is something that is of public interest, okay, that they have to know about this company. Why public interest? Because remember, some of the audits that you do has something to do with publicly listed companies. If I have some information that needs the public should know about this company, then I have the right to disclose. Of course, having the consent of the client. Okay? Remember, disclosure to non-government bodies if it's required to disclose, such as KICPA or ACCA. ACCA and KICPA are not government bodies, by the way. They are private companies who actually regulates the work of auditors. So we can actually divulge them. Okay? Now under the, no, I don't know what ISB, but forget about that, but I want you to look at the Code of Ethics, General Code of Ethics for Auditors. There is, they call a NOCLAR, what do you call it? NOCLAR clause. Okay, they call it the NOCLAR clause. What does it mean? Okay, all right. So acts of omission, intentional committed by the entity, okay, or by those charged with governance, okay, must what? Must be declared. Why NOCLAR? Because it says non-compliance with laws and regulations. Okay? Non-compliance with laws and regulations. You remember what we talked about earlier, like money laundering? Yes? Okay? So there are more actually, because those are examples. What did I tell you? Corruption, bribery is against the law. Okay? Any fraud, okay, that affects the public. Okay, what else? There's something new. Data protection. Anything that goes against the Data Protection Act. Okay, so if you see, if an auditor finds out that the company is illegally selling or divulging information that is supposed to be confidential, that's against the law. Okay, tax evasion, tax non-payment. Okay, anything that goes against public health and safety. Okay, so in the process of your auditing, example, you found out that the company is throwing toxic waste into the river. Okay, do you have an obligation or is it voluntary to state to the government? Do you think it's obligatory or just a voluntary if you want? It's obligation because it will hurt both the environment and the people, okay? The public. Okay? Safety, public safety included here is a terrorist act. Okay? So if it's in our example earlier, it's under here. Public safety is your terrorism. Okay? So if you get to know about that. Okay? Why we have that? Because we have a NOCLAR, because it is part of our principle to be able to make sure that we divulge something that is will hurt people in general. Okay, we need to be able to alert management as well as those in authority. Okay. Now, what should we do? All right, before you start talking to somebody else, first and foremost, get more information about what you've just found out. Okay, do not be too excited. Okay, first find out the more details. You understand? Okay, because we might be wrong. Maybe sometimes we work on assumption. So obtain an understanding about that non-compliance with laws and regulations matter. Okay, number 2. Of course, before you go outside, verify with the management first. Maybe they're doing something about it already, okay? Or they have the roles already. So you don't go out as if like you're the first one to discover discovered it. Okay? Maybe they have reported it already. Okay? Now, of course, you need to look at getting your client to make changes already. You understand? Try and make improvement. Maybe it was a mistake. Okay? Maybe they didn't see it. Okay? So when they knew it, then they made corrections. Okay? Now, depending on your client's response, then you'll say, okay, it was genuinely a mistake. Or maybe you find out they're trying to cover up something. So that's when you should make a disclosure to the authority. You understand? So you have to follow certain procedure. Okay? We don't just stand up and be what we call headless chickens. Okay? It means that once we find out something, we want to dance around and tell everybody immediately. No. You have to follow a proper way. By the way, when we do disclose this stuff, you have to have evidence. You understand? You have to have documents. It's not just, there's no I think. Okay? There's no I feel. We need to find evidence. You're charging something with crime. So you need to be able to support what you're trying to say. Okay? So, alright, so remember what did we say? As per our fundamental principles, we need to work with integrity, and we need to be objective. How do we become objective? Only if we are independent. Okay, so remember, what is objective? Being objective again? No bias and there's no conflict of interest. Alright? So, how do I become objective? I become objective if I am independent. Okay? So, what can make me not independent? Okay? What will make me not independent? Independent means you are impartial. Only then can you become objective. Okay? So, alright? So, the auditor, remember this clause, must not be only ethical, but should also be seen to be ethical. Understand? You cannot say, really, I'm honest, but then you are seen to be going to the restaurant with your client. Yes? But you say, but I'm still doing my work. We just went for a dinner or something. Okay? You have to be seen as independent, okay, in form and in presentation. Do you understand? So it's not only in appearance, I think that was the word, in form and appearance. In other words, even if you feel that you're independent, but people see you, okay, differently, that is no good still. Okay? So it has to be, ethical and to be seen as ethical. Okay? Now, question. How do you become not independent? In other words, what are your threats to being independent? Okay? So, for every threat, you must look at a safeguard. A safeguard means it's either eliminating the threat or reducing that threat. Okay? So, that's what we want to do. We want to eliminate the threat to independence. What are these threats? Okay? There are 5 general main groupings of the threats. Now again, you put a star on that slide and you need to remember the terminology on those threats. What are the 5 main groupings that are considered threats to your independence as an auditor? Self-interest threat, self-review, advocacy, familiarity, and intimidation. Is that 5? Okay? Yes. Okay? So, we need to explain one by one. Alright. You ready? There are many, huh?
So I am going slowly. And you have to be able to understand and remember that first. Okay. Now, it can be financial or non-financial interest. Okay? That will influence, inappropriately influence, which means it will change your opinion or judgment or behavior, okay, on the true outcome of your audit of your client. Okay? So it can be interest, financial or otherwise. Okay? That is a self-interest threat. Now, it can be self-interest threats can be in the interest of not only you, not only the auditor, but of your immediate and close family. Okay? Immediate and close family. So, what are these self-interest threats? There are many. Financial, close business relationship, employment with the assurance client, partner is in the client's board, family and personal relationship, gifts and hospitality, loans and guarantees, overdue fees, percentage of contingent fees, high percentage of fees, loan. Okay? Don't worry. We will talk about it one by one. And this is only the first one. Self-interest. Now remember, self-interest threat can be your own interest as an auditor or a close family member. Immediate and close family member. Okay. Now, financial interest. Okay. So, they should not have financial interest in the audit client. Or, if your client is owned by another company and has a controlling interest on your client, your family member must have no direct interest, okay, or any material indirect interest on the client. Okay? Now, what does it mean? What's an example? When I say I have a direct financial interest, I can own shares of the company. Yes, which means I am part owner of this company. Okay. Or my husband. Sorry. My husband. Okay. My husband has shares in my audit, the company I'm auditing. So I am not what? I am not independent. You understand? I have a self-interest threat. And what particular threat? Financial interest threat. Okay? What about if my daughter has shares in that? Is still close family? Yes. Okay. How about if it's my grandmother? Is it close interest? No, not anymore. It's a little bit far. Okay? So close interest means my husband, my children, my mother, not my grandmother. You understand? Okay? Alright? So, you understand now? Now, how about the second one? It says, it's either I have shares of stock of the client or the client is owned by another company. Can that happen? Can a company be owned by another company? Yes. Now, if my shares is not with this client, but my shares is with the client, with the entity that owns this, that has majority shares of this company, do I have self-interest threat? Yes. Again, the same thing. My husband, my child, my mother, my father. You understand? That will be a self-interest threat. Yun? Kata? Okay. Alright. What do we do? So, if I have something like that, what will I say to the client? Sorry, I cannot be your auditor anymore? Yeah? What do you think I should do? Because remember, I need to reduce the threat, right?
So what are the things that I can do?
Change
Change the client? Change me. Okay. Yeah, I'm the partner, right? Yeah. So in big, especially in companies, if I am the partner in charge of this client, because every partner is in charge of client, right? So what I can do is say, sorry, I cannot audit this client, so you are my co-partner. You audit this client. I'll change to another client. I can. Okay. Or I can say what? I can sell my shares. Well, depending. Don't want to do that, right? But that is an option. You understand? So you can change the partner, okay, because you have self-interest. You just change. Would you say, no, this client is, we would say no, okay? Remember, audit firms are still profit-making companies, right? And that is already a customer in my door. Do I say, thank you very much, customer, bye-bye? No, I don't do that, right? Yeah, so I need to find ways to mitigate that self-interest. You got that? Okay, so, all right. Okay, another thing is loans and guarantee. Okay, so, all right, so I cannot make or guarantee a loan to an audit client. So, which means, as an audit firm, I cannot give a loan to the audit client. Or I cannot guarantee a loan for the audit client. In other words, if the client goes to a financial institution and wants to get a loan, and they need a guarantor. Do you know what a guarantor? You don't know what a guarantor is, right? So just in case you pay, don't pay, the guarantor pays, right? So as an audit client, that I cannot be your guarantor. Nor can I not give you a loan. You understand? Okay. Now, who else? Me and any member of my audit team, okay, cannot do that. Or my immediate family member. You understand now? Okay? So we cannot give loans, we cannot guarantee loans. Okay? So remember, especially if I'm auditing a bank, okay, or any financial institution client. Okay? So how about if I am auditing a bank or a financial institution, and I have a loan with the bank? Can I have a loan with the bank with my client? Yes? Yes? I am the one auditing. This is my client. Can I have a loan? Yes? Okay. May have it. Okay? Provided it is under normal procedure. You understand? Which means I can go and have a loan, but then I have to follow the procedures. It says submit this financial statement, I submit financial statement. If they say we will review your application with our credit board, it's not because I am the auditor and they say okay because it's the auditor proceed. You understand? I followed the correct process to get a right now. However, okay, if a loan to a firm, okay, is material to the audit client, okay, what we need to do is to make sure that we apply the correct safeguards. Okay? Alright. In other words, if the loan is a big amount, material, right? Okay, to the audit client or the client or the firm, it means it's a big amount of money, then they have to make sure that they try to reduce the risk. Okay? Now remember, what did I say? You must appear to be, what did we say earlier? You must be seen as well, correct? Now, if you have a loan, you must be seen to be ethically independent, right? Even if you say, no, but it's proper procedure, we passed the we've submitted everything correctly. Now, it can be that, yes, should be honest, but you will not be seen as to be straightforward, correct? Or independent, okay? So you need to put in the proper safeguard, all right? So you probably, in this case, Again, if that is what happened to your firm or the client, you must disclose everything on that particular loan. Okay? So that it will be very clear. Okay? Now, what about overdue fees? Overdue fees. Who's overdue? The fee to whom? Who did not pay? The client did not pay for the auditor's services. Okay. Okay. So it has been unpaid for a long time. So remember, it could be material. Now, right? Now, the unpaid fees must be paid before the next audit. Then you can continue auditing. Otherwise, what happens? If the fee remains unpaid, so in other words, your client owes you money, correct? Yes? Now, that is kind of a loan, right? But what did we say earlier? We should not what? It's not only we have a loan from our client, but the client should not have a loan from us, the other way around. Okay? So if you have the client has not paid the amount, whose money is supposed to be? Whose money should it be? The client or yours? That money belongs to you, correct? So, now it seems like your client has a loan from you. Yes? So, is that allowed? No. Okay? So again, you need to make sure that safeguards are applied. What is the main safeguard? The main safeguard is get your client to pay before the next audit can commence. Understand? The next audit can commence. Otherwise, it's a self-interest. Okay. Who is the family again? Now look. Where are you? You are this. You are the auditor, yes? Is it that? Oh, is it there? Okay. The darker it is, you see the dark, the light and the dark? Means the darker it is, the what it is. The higher is the threat level, correct? So if it's you who has the loan, you own the shares of stock, then that is high threat. Okay, then who are your close family? Close family is here, correct? Almost like even that. Your children, but the grandchildren, the cousins are far away, correct? But the children, one is dark and one is light. Why? Maybe it's your favorite children and your not favorite children. Right? Why is that? Because one is a little bit darker than the other, right? Yeah, why is that? And then the children is under the spouse. Ah, okay. Now this one, there are instances when a husband or wife marries another that has already children of her own. You understand what I mean? Yeah? You got that? Yeah, does it happen? Yes. Now, if you're the auditor, okay, you would favor your own children, or in other words, it's more closer to you than the children of your wife from the previous marriage. You understand? Okay? That is why there is lighter and there's darker thread. Got it? Okay, so they cover everything. Okay? Alright, so I hope that answers that question. Okay? Now, another threat. Close business relationship. What does it mean? Your audit staff or your partner joins your client's company. Does that happen? No? Yes? No? Okay? So, who works with an audit firm here? Can you raise your hand? Nobody? Oh, you're shy? Okay. Alright. So, here's what happens. Okay? For those who don't know yet. When people join audit firms, okay, usually these young people who finish their education in accounting, they want to join an audit firm. For many reasons. Number one reason, to gather experience. Yeah? Alright? To learn more. Alright. Number two, it's because the audit firm, when you actually, some of them, you ask, where are you working? I'm working with audit. Oh, you want to become auditor? No. I don't want to become auditor. I actually want to work with a big company, but not as an auditor. Or I want to set up my own business. So why are you an auditor? Okay? Because when you have in your CV that you work with a big five, yes, it will actually be very good for your CV, and you get to a good job after that. Yes? Alright? So there are many things why people go to become an auditor. So what happens? Most often, and generally it's acceptable, that the labor turnover of audit firms are very high. You know what's labor turnover? Yeah? Means that many people are leaving every year. Correct? Okay? And they have very high. Because mostly, those actually join the client's staff. Alright, so what happens now? Why is it a threat? Because if my director or my staff of my firm joins the client, and then here I come, my team again, another team, goes there and audits that client. Now, the people in the accounting department, and most probably they will work in the accounting department, are the director and the staff who used to work with me last year in the audit. How weird is that? Understand? So I know them, they know how I work, they know who these people are. So is there independence? Okay? Are you probably saying, but we will be doing our work according to our standards. You understand? Yes, you must be independent by facts and by appearance. You understand? In both. So it's still a threat. It is still a threat. Okay? Now, it's okay if these people join the client and they don't get any benefits or payments. You understand? They can be if they're asked to work there for free and they're not paid. But when does that happen? And this does not happen, isn't it? Okay. So what do you think we'll do? Okay. What do you think the client will do? I'm sorry, the audit firm. No, I cannot stop my staff from joining the client. Can I stop them? No, this is their right. Correct? Now, but what I can do in my audit firm is I need to put up another set of auditors and partners. You understand? It cannot be that the same friends who 1 year ago they worked together as audit team, and now part of them are the audit client's accounting staff, and then we have the same team auditing your friends. You understand? So what you can do is change your audit staff. Not necessarily fire them, but you can change from another team. You understand? Because in an audit firm, they actually, the staff actually and the partners can be rotated with different clients. Do you understand? So I can get another team from another client. Okay? Alright, so it can be that. Okay? Or, if you cannot really do that, then you have to say, sorry, we cannot continue auditing your business. Okay? That is always an option at the end. Sorry. Is that clear in here? Okay, what happens here? Dark. Okay, what happens here? What's in the middle? It says threat level. So the higher the position, do you see the higher position? The higher the threat. You understand? If a partner becomes director, that's a big threat. Okay? But if it's just a junior staff, what happens to the threat? The threat is smaller. Okay? And why is this a big triangle way side up? Because there are more assistants who actually move to the client. Partner is very rare. You understand? Very rare, or maybe only one or something. Here, most of staff would move from the audit firm to the client's firm. Okay? All right. So remember, if no significant connection between the people who join the client and your audit firm, then the threat can be minimized. Okay? Now, how does the company make sure? You say, but how do the companies know where these auditors go? How does the audit firm know where their auditors go to work for? In audit firms, there are procedures. If you're going to be leaving the audit firm, you have to have a form that states where you're going. Very specific, what position, what name of the firm you're going. Okay? So they know if this firm is actually the company, the audit firm's client. Do you understand? Because remember, how do they know where they're gonna go? Okay? So they have specific policies and regulations. Okay? Before they actually get into. They also even have procedures that says, even if at the point where the client is already offering you a job, you need to let the audit firm know. Do you understand? You don't just tell the audit firm that you're joining the company when you're about to leave the door. Okay? When you start getting offers from your audit client, the employee of the audit firm must tell their bosses already. Okay? Because it's already starting. Because now if you're into, oh yeah, the salary there is higher. And I like the boss there. It's better than this audit partner I have here. It's better than, oh, I like to move there. So already, in your thoughts, you're already wanting to join the client, correct? So already, the threat is already starting to work. So at that point, you have already to tell your audit partner or audit manager that something like that is happening to me. Okay? Somebody's offering me a job and I think I like it there. Okay? Don't, you say, but isn't that they're going to be upset with me? Well, nobody's going to be happy. All right? But you still need to let the officer know. Okay. Now, what is this here? I have an actual example. Okay? I have an actual, you can read this when you're having your snacks tonight. Correct? You have a midnight snack. Okay? And you would like to read this, but I'll tell you what happened here. There are two companies in this story, and it's an actual situation. One company is called Enron Corporation. Have you heard that company before? Yeah, okay. Enron, for those who don't know, Enron is one of those companies who closed down during the financial crisis of 2008. Remember? Okay, for those who remember. Now, what happened to this Enron? Why did they close? They had some significant anomaly, okay, in the way that they reported their financial statements. So in other words, they committed fraud. All right, now, who was their auditors? The auditor's name was Arthur Andersen. A long time ago, Arthur Andersen, there were only big four. Arthur Andersen, it was not yet PwC. It was Hooper something. Okay, so there were four. And this Arthur Andersen was the biggest audit firm. Was the biggest audit firm. So what is this story here? Okay, Enron would hire all their accounting staff from the audit firm Arthur Andersen. You understand? Okay. So what happened here? Okay. So much so that when the auditors come and do field work in Enron, you would not be able to distinguish who is the auditor and who is the Enron employee. Because they know each other very well. You understand? They have coffee together. Some of them are, they spend weekends together in a park, some very close family. Some of them are godparents of the other children. You understand? So the family is getting closer. So what happens now? You cannot really see. Okay? So you see there's not much independence, right? Why is the problem? Now imagine if I found out that my best friend, I am the auditor of Arthur Andersen, and you are my best friend, and you work for Enron, and I found out that you're doing an anomaly in the records, do you think I will report you? No. You're my friend. We've been knowing each other. You're my children and your children have been growing together. Yes? So, there you go. There is the self-interest threat. You understand? So you cannot have, what is the threat here? Close business relationship. It is a self-interest threat. Now you can say to me, well, really, even my best friend, but I am ethical in, I'm very ethical, but, yes? But if they see me, we are close friends every weekend, we're together, do you think they think I am ethically sound? No, because I have to be ethical in fact and in appearance. Correct? Right? So that is a situation. So very nice. Please read the story. Okay? Alright. Now, another thing. The partner of the audit firm becomes a member of the board of directors. You know how board of directors work? How do companies hire board of directors? The board of directors is not here every day, correct? Yeah, they come only to discuss strategy, right? So, the board of director of a company can be people coming from the Ministry of Information, can be from National Bank of Cambodia. Sorry. National Bank of Cambodia. Yes, you understand? So they come, right? Now, can it be that the board of director is from the audit firm? Can? Can. These partners, they can be audit. They can actually be a member of the board of another company. As long as you don't audit that company. You understand? So, what happens here? A partner or employee of the firm must not be a director of your audit clients. So, what does it mean? You are the partner of PwC. Okay? I am your client. Yes? Now, if you are the partner of PwC and you are in my board, can PwC audit me? Yes, as long as what? As long as he's not the partner in charge of my company in the audit. Yes? Says, a partner shall not serve as a director of the audit clients. You understand? So, can it be that another partner, you understand, of that firm, PwC, can they audit me? Yes, PwC can still audit me as long as he's not the partner. You got that? Yes. You still want to audit me?
Yeah, because actually, one also
Yes, correct. Yes. That is why the audit firm, when they get selected, they have to state that no, you can select the firm, but the firm has the right to assign the partner. You understand? It doesn't have to be you. There are many other partners. Understand? You can, by the way, be the audit partner even if you're the board member of my company, except that if I don't pay you, that's one. Or your job as the board of my firm, you are not making decisions. You're only there because you act as the company board secretary. Means you take minutes, you make sure that everything is in line, but you do not make decisions. You do not propose anything. You are not paid for your services. Yes? Then you can audit me. You got that? Yes? So, alright, so that is how to safeguard. You safeguard by making sure he's not paid working as a board, or you safeguard by making sure that he does not audit my firm because he is part of my board. Yun? Everybody understood? Yeah? So far so good? Okay. Here's another thing. Gifts. Okay, this one is very easy. Alright, what happens in gifts? Any partner, or any associate, or immediate family, accepting goods, services, or hospitality from the audit client. Yes or no? Can or cannot? Can or cannot? Answer. Can or cannot? What do you think? Can a partner, an associate, any member of the audit firm, their close family, can they accept gifts? Can or cannot? It is a self-interest threat, for sure. Okay, but only if what? Okay, there are things. Okay, so what do you need to do? You need to consider. The answer, therefore, really is it depends. It depends on what? You look at the value. Yes? Alright, so if the value is small, maybe it's not a threat. Okay? Immaterial, for example, they gave you, it says let's look at the company, Starbucks, okay? Starbucks, and they give away pens, right? Okay, so you give the pen, your auditor, the accounting, they gave away pens. You accept or not? Okay, it's just like a promotion, right? You can accept, alright? The nature. Why are they giving it to you? Because it's just promotion, right? They just give it to you, or they just want to say thank you. Okay, what's the intent? What's the intention? Nothing malicious. The intention was not to actually give you a gift because they want you to change your opinion. You understand? Okay? Because if they wanted to change your opinion, then you have to say no. That is a self-interest threat, right? So if they say, and also make sure that if they give you, they don't only give you. What about the other auditor? Did they give them? If it's only you who is being given, so say no. Why only me? Do you understand? There has to be, if there's no malicious intent, you give to everybody. Okay? So it has to be everybody. So it's like if you're given a Rolex watch. Nice. Now you're thinking, isn't it? Okay? So, of course, the value is very high, correct? Okay? And probably they're not going to give Rolex watches to everybody, isn't it? Yes? So you need to look at the nature and the intent. Okay? So it really depends. Okay? Let us say, right? Before that. Okay, I'll give you an example. You were asked, you have been given a free, all expenses paid to go to spend a week in the villa in the south of France. Okay, that is owned by the CEO. Okay, so you know, it's hospitality. It's not a gift, correct? Okay, but it's not physical, but it's a hospitality. So of course you know, value is high, and it's only for you and your immediate family. The intent is there. You understand? So it's very clear. It's a self-interest. Okay. Now, undue dependence on the client. What does it mean, undue dependence on the client? Means my audit firm has only a few clients, and the money I get from the fee that I collect from you is significant to make me able to continue as an audit firm. So I am dependent on you for the existence of my business. So do you think I will try and
destroy that relationship? No. I have self-interest, right? I need to keep him as a client because he is able to support my business. Okay? So that is a threat. It will impair your objectivity. Okay? It's difficult to make, I don't know what does that, make a stand because I cannot, for example, if I found that his financial statements are not true and fair, I cannot issue a report that says your financial statements are not true and fair because he's going to be upset and he's going to leave my company and it will affect me as an audit firm. Okay? So I have a self-interest threat. Okay? So what do I do? Especially if I am a client, an audit firm who is just starting. Okay? So normally, if you could actually recommend that your, for example, another company in Vietnam, for example, do the audit first. Okay? While I am what? I am building my client base. Because the more client I have, the lesser is my dependent on one client. You understand? Okay? So you build your client. So how do I know if that client is, I have undue dependence on that client? How do I know? Okay? For 2 recurring years. Recurring means one after the other. For 2 years, okay, what is PIE again? Public interest entity. In other words, the client, yeah? Public interest entity, okay, should be, right? Alright, so if the public interest entities, okay, makes up 15% of the firm's revenue. In other words, the fee I get from my client, who is a public interest entity, for 2 years total, or in average, comprises 15% or above of my total revenue as a firm. So then I consider that as undue dependence. Okay, again, you are my client, correct? For 2 years, I audit you. The money I get from you is 15% or above of my total revenue for 2 years. Then I am dependent on you. Okay? Got that? Yes? Okay? So, which means, then, I have a self-interest on him. Got that? So, how do I reduce that? Now, if I can reduce that, if I get more clients, that percentage will become smaller. Got that? That percentage of 15% because now I can get more revenue from more clients. Okay? What happens if it's not easy to get more clients? So what I'm going to do, I'm going to get him to be audited by my sister company in Vietnam, for example. Okay? For this year until I get to build my clients. Because I cannot. I have to eliminate that risk or that self-interest. Okay? Got that? Okay? Right? Or I can actually ask another audit firm in the meantime to audit. We have an agreement, you understand? Audit first, but that client comes back to me after certain. Okay. As well. Yes.
So that also
No, that is by rules. Yeah. He's saying that, especially here in Cambodia, if you are auditing a bank, okay, you're auditing a bank, you can audit the bank only for 2 consecutive years. After that, the bank has to change audit firm. That is by regulation. By regulation. Not because of dependence, but by regulation. Alright? Now, okay. In the bank. Yeah, in the bank. So it's 2 to 5 years, you mean? 2 years. Some companies, 5 years, yes. It's 5 years now. When I used to audit, it was 3 years. But every 5 years. Okay. Some companies set up by every 5 years. Depends on the company, but yeah. Some charitable institutions also put as a part of their regulation that they have only the auditor change every 3 years or something. They state. So it depends on their rules. Yeah, it can change. Either from the ministry, from the bank, or as a company or charitable institution. Okay? So they can change auditors also. Alright? So, okay, so let's look at this again. Public interest entities. Their total fees represents greater than 15% of 2 years consecutive. Consecutive is one after the other, correct? Okay. So you have to disclose that to those charged with governance, and of course you need to apply certain safeguard to reduce that percentage. Okay. All right. So here's a case. Okay, just one case before we leave today. Another thing you would like to look at again. It's Arthur Andersen. You remember that audit firm? By the way, you probably ask, where is this Arthur Andersen? They don't know, they have been dissolved. Okay, they were asked. They don't exist anymore because they have a lot of anomalies. I will tell you more tomorrow. But here, what happens? They have another client called Global Crossing. Now, here's what happens. Arthur Andersen, okay. The audit fees in 2000 was $2.3 million. Okay, imagine 1 year audit fee alone. Okay, now this Arthur Andersen, they also do other work for this client, non-attest work. What does it mean? They actually give management advisory, financial advice. You know what I mean? The audit firm can do many things for a client, correct? Taxation, review of systems, and things like that. So, other work they do for Global Crossing, they get how many millions? 12 million in fees. Okay? Now, I know we don't know how much but 2.3 million from this comparison alone, yes? How many percent is that? 2.3 out of the 12. About 20% already. How many percent were we looking at? 15. So from this client alone, remember, if they're making this much already, let's say, right? If they're making this much, 2.3 is only 20 points of this much alone. Okay? So, is that a threat? Yeah. Because here, look. If the Global Crossing does not like the report or the opinion issued by Arthur Andersen, you understand? Then they will say, for me, then I will take you out as an audit firm. But if they leave as an audit firm, they don't only lose 2.3. What would they lose? Also the 12 million. Do you understand? If Global Crossing says, no, if you don't want to issue the report I ask you to do, I will change the audit firm. Can they do that? Can the Global Crossing change auditors? Yes, of course. But when they will change Arthur Andersen because they don't agree on the report, what else will be lost? The other work. So what happens to Arthur Andersen? They not only lose 2.3 million, they also lose the 12 million. So what do you think they will do? Their audit work is here. Then they will follow what the Global Crossing wants them to issue, correct? Yes? So are they independent? You understand? And that is a real story. You got that? So there you go. There's a self-interest issue. Alright? Dependence on, undue dependence on a particular client. Yes? Okay, let's see.
before you leave. If you answer me correctly, you can leave. Otherwise, you stay with me the entire evening. Okay, now, remember, tell me the 5 professional ethics without looking into your notes. Look at my eyes. Integrity. Okay, professional competence and due care. Charity. Charity. Okay. Professional behavior. Okay, but one of them, he says, confidential, we can talk about that tomorrow, but to be objective means you have to be independent. So what are the threats to independence? There are 5 major. Self-interest, which is review, advocacy, familiarity, and intimidation. Correct? Good. You have a photographic memory, huh? Excellent. Okay, but homework. So far, under self-interest, what would be considered self-interest threat? Give me one. Financial interest. Next one. Close business relationship. Yes? Okay. Next one. Gifts. Easy, eh? Gifts includes hospitality, eh? Undue dependence on the client. Anything else? Overdue fees. Correct. What else? Don't forget loans and... Okay, good. Very good. Okay, tomorrow there are more juicy details. See you tomorrow. Okay, we will do multiple choice questions.